investor doing things on your own? How about someone working with a firm that isn't so responsive or in sync with your investment philosophy? My podcast talks you through all things financial. Look, there's stuff you don't deal with very often, but investments, insurance, and retirement is something we plan for each and every day. This is the PennyWise Financial Podcast, and welcome to the show. Welcome to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with my co-host Sam Gueli. Welcome to the show, everyone. Today is August 31st, last day here in August. We've got one more month to finish out the quarter, and then it's smooth sailing from here on out, I think. Maybe not. But Sam, end of the August month, kind of end of summer for us. I was just down in Florida. We did our remote podcast last week. Weather was beautiful. Weather was seriously beautiful. Business was booming. Every restaurant was full. They were employed. There was tons of activity. We did some of the theme parks. All of them were packed, despite everybody saying it's going to be quiet. Kids down here in Florida are back to school. Well, I don't know about the kids down in Florida, but there was a lot of people from the UK. There's a lot of people from the north that hasn't started school yet, and the weather's just starting to kind of calm down. I noticed when I got back into town, it's already starting to get dark around 7 o'clock, 7:30, and it's depressing a little bit, right? I'm not ready for this.
Yeah, I mean, you kind of mentioned it earlier last week too. The summer's kind of flown by a little bit, and we're getting to the point now where, like you said, days are getting shorter. It's getting darker early, and yeah, depressing is a great word for that.
I know. And, the early part of the year, we started off in the stock market okay. Things got ugly pretty quick. They stayed quite choppy. Maybe a month ago or so, last 35, 40 trading days, it looked like things were starting to buck the trend, right? And starting to improve. And maybe some people said, well, we're out of this. Things are going to start looking better from here on out. But now the last couple of weeks have really started to show some more turbulence. And, I think on our flight home, the captain came on and said that we were going to be experiencing some turbulence. And my son looks at me and he goes, Dad, turbulence, what does that mean? And, I kind of explained it to him. And I think about that message that we convey to our clients is we let them know that sometimes there could be a bumpy ride. We still have our target, our destination on where we're going. But yeah, things can get bumpy, right? It's a stock market. That's what happens. It's investments. So why don't we jump into the major indexes? Why don't you share some insight on where things have been, what has been transpiring so far?
Yeah, so a little bumpy is a great description of what we have going on here. A lot of red. And like you mentioned earlier, over the past 30 to 40 days, we thought we'd be getting some more positive numbers, and we did for a little while. But let's start with the Dow Jones here. Over the past week, we're down about 4%. Over the past 30 days, we're down 3.5%.
Wow.
So definitely different than previous. But year to date, we're still down almost 13%, and that number is going up, or I should say down as well. And the S&P 5000 is going to be a similar trend, down about 4% over the past week. Past month, we're down over 4%, and year to date, down to about 17%. NASDAQ, 4.5% loss over the past week, 6.5% loss over the past month, and year to date numbers down to 24% negative. Moving on to the Russell 2000 over the past week, same thing, down over 4.5%. Down about 3% over the past month, and year to date we're down almost 18%. So definitely a big change in course.
I don't love what you just read. It's no fault of your own, but
it's all my fault actually.
It's all I blame it all on Sam. Really, we do. It's hard to point fingers. I mean, we talk about it time and time again. We sound like broken records. I don't know how these guys do the show, financial shows every single day and come up with content and try to make it sound interesting and exciting. But we talked about the Federal Reserve, and raising rates and how that impacts the market. Sometimes good news is bad news now in this market. Things look too promising, and the Fed continues to increase interest rates, and market tumbles. And you know, Janet Yellen before Jerome Powell, I said it before, should have been raising rates when things were good, and now we're feeling the impacts of that. There's some other things that we'll get to later in the show with legislation that may be making things even worse. We printed all this money, did a lot of things, stimulus and things like that. It reminds me of some of the bailouts that happened in 2008. A little bit different though this time. It was the money was given here on Main Street instead of Wall Street. Back in '08, all those bailouts and whatnot, they didn't bail you out. They didn't bail me out. They didn't bail out our parents. They bailed out these larger, major corporations, and prevented many of them from failure. So let's take a look at some of the other aspects of the market that some of them have been doing okay. So if we look at first the XLE, that's the Energy Select Spider, that's the ETF. Year to date is up 42+%. Okay, that number still looks pretty good. In the last 30 days of trading, it's up 6%. How about in the last week? Well, last week it's down about 2.5%. So not quite as bad as some of the other major indexes that you mentioned in the last week or two. I like the positive momentum on the 1 month number. And actually, commodities and energy and oil has slid in the last maybe 45 days or so. We looked at that as a buying opportunity. We have some of these companies that pay a nice, healthy yield, a nice dividend to buy back additional shares when they're going down in value, when they're getting cheaper to acquire. I think that longer term energy costs are going to go up. We talk about natural gas, we talk about oil. I look at those as opportunities. So if we move on now to the XLF, that's the Financial Select Sector ETF. And the financial sector year to date is down about 15, almost 16%. Last month or so is pretty much flat. And in the last week, it's down about 3%. So pretty much in line with the broader market. We move on to the XLRE. That's a real estate spider select ETF. Year to date, that is down 17.9%. In the last month, down about 4%. In the last week or so, about 3.4% down. So a pretty common theme across a lot of not only the major indexes, but some of these sectors that may sometimes differ from the broader market. We move now on to the Grayscale Bitcoin Trust. That's the GBTC. Year to date is down 63+%. Last month down almost 12, and the last week down almost 8%. So these are still feeling the pain. Then we move on to the Grayscale Ethereum Trust. That's the ETHE. Year to date, that trust is down 63+%. In the last week or so, it's down almost 12. The smallest of the three is the Grayscale Litecoin Trust. That's the LTCN. Year to date is down 66%. And in the last week is down almost 10%. So not too well across the board on those cryptocurrencies. And finally, we come to the Spider Gold Trust. That's the GLD. Year to date, it's been pretty flat, down almost 5% in the last 5 trading days, down about 2.3%. So I can't imagine any investor right now is feeling too confident about what the next move is going to be in the market. Is it going to be up? Is it going to be down? We've looked at a number of charts. We've looked at midterm election years. We've looked at charts where market dips down 10, 15+% and how they fare in the next 8 to 12 months. Typically, it's positive, right? We started to see that momentum. People thought maybe this is the time. This is the shift. This is where we're going. We're back on our path, our flight to newer highs. And then the market puts us back into check, right? It reminds us that, look, this is the stock market. It goes up and down in value. There's a lot of things that impact the market. It's not just us as retail clients. We could buy all the shares of XYZ company. It's probably not going to move the needle, right?
Yeah. So if you had to guess, what do you think is the main, problem causing what we're seeing right now?
I think I think whether the market's going up or down, a lot of it is uncertainty and trying to anticipate where the market is going.
Mhm.
And you use the data that's in front of you to try to figure out, okay, 12 to 16 months out, what's going to happen? So interest rates are going up. So what types of stocks will be impacted by that? Well, we know financials are, right? So if you're a lender, if you're a bank, you lend out, you take in deposits and you loan that money out, and the margin, the delta between that is really what your profit is. And so if you are paying out 1% and you're lending out that money at 4%, you've got a 3% right there margin that you're making on that money. Now, if interest rates go up, you widen that gap, you make more money, right? So some of the smaller regional banks will do quite well. Some of the traditional savings and loan, again, as rates go up, that spread widens. That's good news for them. Hasn't paid out yet. Has not panned out. Despite everything that we're hearing, we know that interest rates are going to continue going up. The Federal Reserve has mentioned many, many times they're not going to take this dovish tone. It's going to be more of a hawkish tone, which means they're going to be more aggressive in raising interest rates. Again, not to beat the crap out of this dead horse, but we talked about the Fed not raising rates when they maybe should have. And Janet Yellen coming on and saying that she apologized. She did not recognize or identify the severity of inflation, right? And now Jerome Powell is the person that's in power that is here to kind of fix things, if you will. And he may be getting a lot of the finger pointing, right? It's easy. He's got a target on his back. But I think it's necessary to do. There's never the perfect time for anything in life, whether it's raising interest rates, getting married, having kids, starting a family, going back to school, starting your own business. Those are big decisions. And I think the Federal Reserve is going to do everything in their power to kind of curtail spending and keep inflation at bay. Right now, the euro trading pretty much in lockstep with the U.S. dollar. U.S. dollar is still pretty strong against some of the foreign currencies. Jay and Dave are heading off to Macedonia. They leave, I think, tomorrow. And I'd love to hear what they're seeing as they travel. They're going to Canada first, and then they're going to be traveling to Macedonia. Me being down in Florida, I can tell you that the economy there seems to be booming. The weather is great. It's vibrant. People are out. They're spending money. So the Federal Reserve, people are traveling, right? I think I think a lot of that has to do with just the atmosphere that we were in, the conditions, being pent up in a house. Everybody was on a computer and they're sick of it, right? They're sick of Zoom calls and
Yeah.
phone calls. And there's a certain feeling too, when you meet with a client face to face versus a phone call or Zoom, there's a different connection, you know? And I think even when we started talking with you, it was a Zoom call before,
I think the very
right?
first meeting we had was
First
via
meeting.
Zoom. Yeah.
And you don't get the same feeling. You can't through video. It's hard to convey. It's sometimes it gets choppy. It's bogged down. It's just body language is off.
Yeah. Actually, I remember it was kind of funny. I think you were either at your house or in your office, but Dave was in his car, I think, using his phone. So he was like driving, trying to pay attention to the meeting or whatever. But yeah, that was funny.
That's great. Well, I think that gives us an idea of where we were as we navigated through these months. This is now bringing us to the end of August. And we're going to try to make light of what we have, the data in front of us, to navigate what the remaining months throughout the course of this year will look like. And then as we move on to next year. With that, let's take a quick break and we'll be right back with the show. Do you want help building and managing an investment portfolio that's right for you? One that will help you maximize growth potential while you're saving, help you generate income when you need it most, and eventually preserve what you've saved to leave to your beneficiaries? We do this day in and day out and take the stress and responsibility of making those decisions off your plate. Subscribe to our newsletter, read our blog post, and listen to our podcast to get a flavor of how we do things. Our firm is unique and capable of handling all your investment and insurance needs. Monarch Wealth Management, our guidance, your future.
Welcome Welcome back to the PennyWise Financial Podcast here at Monarch Wealth Management. My name is Sam Gueli, alongside of Constantine Kitrinos here in Brighton. And today we were discussing somebody who reached out to us regarding debt, and specifically this young lady. She had recently just gotten out of a lot of debt, so she was feeling pretty good about herself, paid it all off. She's financially more free than ever. And she had a great question. She was wondering what she should do with some of the money that she accumulated in her bank account that she has yet to invest. So she didn't know what to do with it. Where should she be investing? Should she be investing at all? And that's what I'm wondering too. So Cons, what do you think about that?
Yeah, I love these questions because I feel like they're more and more common, and things get out of control. I can remember, and you went to UB, so you will appreciate this. At the student union, they used to have, and I remember when we just moved in that weekend, they had all these booths around, and they gave away free stuff. Back then, I don't know, maybe they were giving out CDs with music, or cups or koozies, things like that. You go up and you get a T-shirt and this and that, and then they give you their pitch, if you will, on credit cards. Hey, Sam, you got to get this credit card. You're in college now. You got to take life seriously, and you got to build your credit. And so I remember signing up for one of these cards and doing it. And, that was my first go, my first understanding of credit, right? And I think for most it is, because you're 18. You're now eligible. You're able to apply for a credit card. Not quite sure how they give you your first credit, but yeah, you have to do that to establish things, right? To establish yourself. Now, in this case, this person is younger, who paid off debts and started to accumulate some cash, right? So it could be scary, especially with the numbers that we mentioned so far year to date, right? It's not going to get you too warm and fuzzy about investing. If you're new to investing, if you don't have a 401k, if you don't really understand how it works. And in this particular question, I know one of the things that she mentioned was she's comfortable putting money into a bank account, because the only reason it goes down in value is because of who? Because of her pulling money out, spending it, buying things, whatever it might be. So it can definitely be an eye opener. And if you go through some of the basic fundamentals of investing, we can look at all kinds of charts. We can go back and say some years you make money, some years you lose money. But until you actually start investing and see that account statement fluctuate in value, only then can you truly appreciate what that means, right? I'd say if you're younger, you have time on your side, there's a number of different things you should do. Step one is complete the profiler online. Schedule a meeting. Let's get together. Let's have a conversation. Let's talk about your goals. What do you want to do in the next 12 months, next 5 years, next 10 years, long-term goals, retirement, things like that. Do you live in a house? Do you own a house? Do you rent? Do you have any other debts, any other assets? Car loans, student debt, credit cards, personal loans, anything like that? Are you married? Do you have kids? What's important to you? Because I could tell you invest and make money, and that may not make you feel warm and fuzzy. There's a story behind that. It's not just accumulate money for nothing, right? Maybe you want to travel. So in order to travel more, you need money to pay for those trips. Okay, well, now we know what your goal is. So I think it's first really identifying the goal. A lot of times people say, I just want to make money. There's more to that. There's a reason why. Unless you're Scrooge McDuck and you just want to go swimming in these coins, whether they be digital or real gold. But anyway, so that would be the first step, filling out the profile or getting a meeting. Let's talk. Let's find out your goals. Let's find out what's important to you. Let's find out what makes your heart beat, right? Aside from that is maybe establishing not only just your regular bank account, your day-to-day spending, but how about an emergency fund? If that's separate from this, if it's not, it should be. You got to have an emergency fund. 3, 6, maybe 12 months worth of living expenses. If you, God forbid, lose your job, get fired, your position gets eliminated, you don't know. Life happens, right? And, it's funny because when we go through this process, a lot of times you get more questions like, why are you asking that? What are you going to do in 5 years? I have no idea what I'm going to do in 5 years. Right. What do you want to do in 5 years? What do you want to achieve? What are some dreams? What are some goals? Well, I want to be a millionaire when I'm 50. That sounds dumb. It sounds stupid. It's not attainable. Well, sure it is. So how much do you make? Make $50,000 a year. What does your bonus look like? Do you have more free time? Do you have a side business, side hustle, whatever it might be? So there is a will, there is a way if you come up and really define those goals. So start there. That's the first part. Getting that emergency fund, finding kind of that third bucket, right? So you got your everyday money. You've got an intermediate bucket that could be a combination of CDs, could be some I bonds, could be some other types of investments that will allow you to add money and take money out when you need it. And then you have your long-term accounts, which would be like your retirement, your 401k, your IRAs, your Roth IRAs, creating a pension for yourselves. And then there's the other aspect is protection, right? And what do I mean by that? I mean, well, you've got a job. Maybe you're married. Maybe there's a person that's a stay-at-home, but replacing that person, that stay-at-home person, is important too, right? Because they take care of the kids, they take care of the house, they take care of the groceries, paying the bills, things like that. So there's some value there, not just on the person's life, but there's a financial component to it as well. And I'm sick and tired, and I've been getting more and more of these questions, of getting the questions about how nobody talks about using life insurance as an investment. And I think what it is you get all these ads on Instagram and Facebook and whatever social platforms, and they tout all the benefits, right? Nobody talks about this program. I've got these secrets on how to create wealth that's tax-free. And all those things could be true if you understand every aspect of those accounts. So again, it's really starting off with a meeting, talking about goals, establishing a plan to have certain things in place like emergency fund, maybe life insurance, maybe disability, and maybe you have those things through work, and that's okay too. And then again, not to bring it up again, but we just met with Marcus Kroll from the Kroll Law Firm, talked about estate planning. Mr. and Mrs. Smith, you don't have a will. Well, we're only 30. We just have a house and a couple cars and not a lot of money, our investments. It's stuff, right? Got a couple kids at home, right? Yeah, we've got a 10-month-old and a 2-year-old. What happens if you die? Oh, we don't want to think about that. And so the state has a plan. Obviously, we talked about that. But tying in all those pieces, surrounding yourself with the right professionals, CPA, attorney, financial person, getting all those things in line. So I think that's where I would start. And I would tell Stacy, I would tell her to really get a meeting and we can talk through those things. It's not going to be easy, right? Because new to investments and understanding they fluctuate in value is different than actually investing and seeing your account lose money.
Yeah. So I have another question just to kind of go off what we just talked about. You said people don't really understand how you can use life insurance as an investment. What do people not get about that? And what do you mean?
So have you seen any of the ads
For what?
for life insurance as an
They're
investment?
all over the place.
So typically what you'll see is I use a tax-free vehicle that the government doesn't want you to know about.
Mm.
And they'll come up with some coin phrase or tagline, a 770 account, a presidential account. Get rid of your taxes. The IRS does not want you to know about this. And so essentially what they do is it's some type of permanent policy, life insurance, right? So life insurance does what? It protects, right? Who does it protect? Does it protect Sam?
It's usually your family against, loss of income if you were to die.
You got it. Maybe satisfying debts, replacing your income, maybe paying off a mortgage, those kind of things. So that's a life insurance component to it. You don't benefit from that at all, from that part of the policy. Works a lot like a regular term insurance. But on the permanent policies, there is a way that you can create some cash value in those accounts over time. It will take time and it will take premiums. They are expensive. The premiums will either have a defined period. You're paying until you're 65, you're paying until you're 70, you're paying all years of your life. So it does require some premiums. So now inside of this life insurance, you have a couple different vehicles that you can utilize. One is for yourself and one is for your beneficiaries. So it has two components to it. So it's not as simple and straightforward as people make it seem on Instagram and all these short video clips that you're seeing. The story they tell is open this policy, throw some money into it, and rip as much money out as you want over your lifetime, all tax free. You don't have, it's private. You don't have to report it to the IRS. So here's what happens. You build kind of this nest egg inside of your life insurance, which does require pretty substantial premiums, depending on your age, your health, things like that. But as you do that, you can borrow against that policy and take the cash value out of that policy. Now, if you completely deplete that account, the cash value is now zero. You can do two things. Number one is the policy would blow up, means that all the money that you put into the policy would be a return of your own premiums, right? There could be some tax consequence. Depending on your age, there could be some penalties. So they don't tell you about those things. The other thing is it may require you to either pay back those loans and or pay additional premiums at a pretty substantial rate that may not be affordable to you. And so what I hate seeing happen is, we get these younger families that come in here, maybe 35, 40 years old, have a couple kids. They've got maybe $500,000 life insurance policy that's permanent, and they're paying $500, $600, $700 a month in premium. And I say, well, look at that cash value, 10 years out, 20 years out. It's going to be worth $500,000 by the time I'm 60. Well, there's a couple different parts of that you got to look at. There's guaranteed and there's non-guaranteed, depending on if it's a whole life or universal life or indexed UL, all kinds of different products. You want to be careful of the details. So that's why I don't think there's a blanket answer. Yep. Now, I've seen it work well for some people. High income earners, doctors, attorneys, looking for other different vehicles. You're maxing out your 401ks. You're maxing out all your retirement and your tax deductions, and you're looking for another vehicle. You've got more money. It's usually not the people that are 35, 40 years old that have a family, maybe a house, a couple cars, 401ks. They don't have a lot of disposable income, a lot of extra income. That money would be better utilized in a regular investment. Paying the taxes on that money when and if that time comes. Doesn't require a premium. So what happens if you can't pay those premiums? You lose your job. You got to have a job for 6 months. That $500 a month doesn't just go away. That premium has to be paid. You're going to end up borrowing against your cash value in your policy if there's any left to preserve that. Otherwise, you lose everything. It's gone. So you have to look at both the benefits and the drawbacks when you talk about those. And that's why I hate those little clips. Buy this, tax-free income. Nobody talks about it. Your financial person is not talking to you about it. Oh, it's a load of crap.
Yeah. I mean, when I see those, I usually just disregard them completely. I kind of think they are scams, even if they're not exactly. But still, I'm like, who's going to believe this stuff?
You know what the crazy part is? I say the same thing. A lot of people believe it. A lot of people ask about it. If something is too good to be true, it sounds too good to be true. It probably is. Probably is. And there's a lot of, I hate to say it, there's a lot of suckers out there that believe this. Oh, I saw it on, how do you know? Did you do any research? No, but I saw a video. It was on YouTube. So it's got to be real. So, you really should meet with a person that you trust. And that makes my job even more difficult. It makes people not trust a financial person. These guys that go out and gals that go out and get an insurance license, that gives you a license to do some damage, right? It doesn't mean that you're experienced, you know what you're doing. Just like a doctor, right? A doctor that just finishes the residency, whatever it is, they have all their certificates, degrees, whatever they need. They're capable of doing things, but they lack the experience, and it's going to take time, right?
Yeah. And
there's going to be circumstances that they couldn't learn in school. There's a practical element. There's real life planning. And the same thing holds true with financial people, right? You get all the licenses, all the credentials. I'm a CFP, I'm a CFA, and that's great. But there are such things as good doctors and bad doctors, whether they have 10 or 20 years of experience. Maybe they have a way of practicing that might not be traditional or accustomed to what you want to see, for your path. Same goes with financial people. Right. So you may not like the way that I invest or protect or use insurance. That's okay. There's other people that will help you if you want a different remedy or a solution or plan. Right. There's always people out there willing to help. I know that much is true. To answer your question.
Yeah. And then some.
Yeah. I think it requires people to take pause when they see a video or a blurb, an email, a brochure about something that sounds, it reminds you of like because I love metaphors, right?
Mm.
You go into a condo presentation, a timeshare presentation, you get all excited. I did it before. My wife and I went to one ever. It was a disaster for the salesperson because I dug into numbers. I'm a numbers person, obviously. But you go in there and this glitz and glam. Right? You think they show you the dumpy timeshare that's like tucked away in the corner that has no view?
Nope.
No, they show you the glitz and glam. We got shown a 4 or 5 bedroom that was oceanfront. I mean, I think maybe a celebrity might live there, but yeah, it was a gorgeous place. I mean, who wouldn't fall in love with that?
Yeah.
So then you sit down and look at the financial parts of it. It doesn't make sense. It doesn't make any financial sense. Now, I have a lot of clients that actually own timeshares. They don't own it because it makes financial sense. They own it for a lot of different reasons. It's easy. They know what to expect. They know where their place is. They don't have to pay property taxes or any damages, things like that. They pay their maintenance fees and whatever they bought the place for, and that's it. And they show up. So I think we've kind of run the gamut on that question. With that, let's take a quick break and we'll be right back with the show. Do you have a high deductible insurance plan? If so, have you set up your HSA? There's a ton of people who don't know what it is or how it works. Even worse, there aren't many people who can give you advice about how to make the most of these powerful and unique programs. Not many advisors focus on this in their practice, don't understand the mechanics of how they work, or even where to begin helping their clients. Reach out to me, Constantine at Monarch Wealth Management, and I'll guide you through this process and get you on track to make the most of your high deductible plan and your superhuman HSA. Welcome back to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with my co-host Sam Gueli. Welcome back to the show, everyone. Today is Wednesday, August 31st, last day of the month, and things are really starting to cook. Well, maybe they are, maybe they aren't. I don't know. It depends on the minute. But we covered some ground on where the markets have been so far this year, the last couple of weeks of trading, last month. Answered a couple questions. I think it is important. One thing I don't want to forget about is we do have an event coming up, and that event is happening on Friday, October, was it 13th? Let's take a look here. This is going to be a market update, and this is based on feedback. Yeah, so we're Friday, October 14th at 11:30 at Nocino Restaurant at Eastview Mall. Not only will you hear from David and myself, but we're going to bring in a field expert from Pacific Life. I think it should be a pretty good turnout, a good event. It's what clients asked for. We haven't done one of these in a couple years, obviously due to COVID and whatnot. So this is our first live event, in-person event that we've hosted in a couple of years. So I don't want to forget about that. If you need info on that, please message us, info@monarchwealthmanagement.com. I'd be happy to send you over a link to register. We do have limited space for that first event. When we book that up, we will offer some additional events in the future. Moving on, let's talk about this one because we mentioned earlier on in the segment, we mentioned school, I mentioned UB, mentioned credit cards and going to the student union and signing up for all that jazz. But there's something that passed last week, and it's been in question for a while. I wasn't sure. I don't think many people were sure if it would actually pass or not. So this student debt forgiveness, do you know anything about it?
I know a little bit about it. I think if you make less than a certain amount, they'll forgive $10,000 worth of debt that you have.
For not knowing much, you pretty much nailed it on the head. Again, I was kind of similar to you because this idea has been passed around for a while. I know they talked about it a while ago. I know part of the campaign for Biden was that he was going to incorporate this. I had some clients who had some student debt that said it was still part of the federal program, that they felt that it would pass, so they didn't consolidate. So the majority of the debt is going to be government owned. In this case, so here's some of the details of this. So this policy would forgive about $10,000 in student loan debt. There's some parameters though, right? So you have to earn, if you're an individual, less than $125,000. So $125,000 a year is kind of the threshold. And there's another incentive. So there could be an additional 10,000 in forgiveness if you were a low income student. So what that meant is you qualified and did receive a Pell Grant while you were in college. So that's up to 20,000. I'm not sure about the process, when you can apply, when does it actually go into effect, but I know that he signed this policy last week. In addition to that, how much student debt is there? Any idea? I mean,
I have
millions,
no idea.
billions,
I would assume a lot.
1.75 trillion
Jeez.
right now, over 43 million borrowers.
Wow.
So on average, that means about 17%, 1 in 6 households have some type of student debt. The average debt, any idea what the average college debt is out there?
I mean, 20K. How about that?
41,000.
Not quite.
So, yeah, and I imagine that's got to be going up because the cost of tuition now has been going up for quite some time.
Yeah, even like state schools and in-state tuition.
I know. So I'm curious to see what's going to happen. Now, what I'm wondering is where are we getting the money for this? Right?
Yeah, I don't know.
Well, like I mentioned at the very beginning of the show, there were some programs that we rolled out, we as a country, in the last few years to help people survive through this pandemic when we didn't know what was going to happen. And we printed money, right? We printed money for individuals, we printed money for businesses. A lot of people got some funding to help them survive, right? But it doesn't come without cost. We're going to be paying for that, and we pay for that through inflation. Right now, let's see here. Any idea how much the forgiveness program will cost us? So you figure it's about 10,000 for some folks who qualify, up to 20,000 for some folks who were considered low income and received a Pell Grant. This package is estimated. This is a pretty big number. Cost around 300 billion with a B. 300 billion. It's about $2,300 per household across the nation. So it's not going to be cheap. I think there's going to be a lot of people that might be a little pissed off, right? Yeah. Congratulations to those folks who are eligible for this. I have no hard feelings. I was able to, fortunate enough to pay off my own student debt. And I have an appreciation for it. I think we mentioned this on other shows about ways to fund for college, 529s and grandparents and using life insurance and even Roth IRAs and things like that. But I tell you what, there's a few things that I took away from college besides the actual degree. And I think they hold more weight than the degree itself because I'm not using my degree at all.
Right.
One of them was the life lessons you learned about friendship connections in college, right? The other thing was about money, right? A lot of things about money, right? You had probably an off-campus apartment at some point. Means you paid for gas and electric, which means you had to upkeep your apartment or your unit if you rented a house. But it also gave me a newfound appreciation for understanding why I was at school and what I was actually paying for. Some of the kids that we went to school with, they got a full ride. Some of the kids' parents had cash, just paid cash for their school. And they just showed up, maybe worked half as hard as they could have or should have or, wanted to. But they took it for granted. And they left college and it was like, okay, it was college. It was kind of like an extension of high school, which in many cases it can be. Mm-hmm. But I think there's a lot of life lessons that you learn from going to college and actually having some debt. And both David and myself worked full time throughout our entire college course. Believe me, we had plenty of fun.
Oh, I'm sure.
We studied a lot. We worked hard. But I have a real respect now and understanding for debt and what that means and why I was at school. So who does most of the borrowing? Is it undergrad? Is it graduate school? Well, it's kind of split 50-50.
Yeah, I would guess it'd be both.
And so obviously not as many people go on to graduate school as they do undergrad. A lot of people will start off with a 2-year or 4-year degree and kind of stop there.
I would guess though, kind of makes up for it that grad school is significantly more expensive.
Absolutely. So the debt load between the two is actually split in half. About 50% of the actual student debt out there
Mhm.
accounts for kids who are in undergraduate programs. The other half is from graduate students, which is significantly less than the amount of people who went to undergrad. And you're right, the cost, but the cost is exponentially more in grad school, and it's continuing to go up. So that's not a good thing. If you want to go on to grad school, the costs are pretty substantial. They looked at in this article that I'm reading from here is they looked at the 5-year default rates. So looking at student debt, who do you think had the highest rate of default?
Hmm.
Well, it's undergrad, and it tended to be for-profit institutions.
Really?
They had the highest default rate where a lot of the students didn't even graduate.
Hmm.
So default, I'm curious what they label as default, because the student loans, you can't go bankrupt on those loans. They just don't disappear. They don't vanish like other debts.
Yeah.
Not to mention destroy your credit if you go bankrupt. But I thought that was kind of interesting to see that some of those defaults were mainly from the for-profit undergrad programs where they didn't finish their degree. Kind of makes sense. So you dropped out. So you didn't get the degree. You have the debt. You didn't really get the benefit of having that debt, right?
Mhm.
All right, let's look at. So we mentioned 125,000 per year for an individual. If you're married, does that include a married couple as well? No, it's a 250,000 per year for the household. So they would not be eligible for loan forgiveness if they make above that amount. And I gotta imagine, again, I don't have any hard feelings. I'm not in love with this package. It's going to cost us all money.
Mhm.
And then you think about these kids that go to these kind of like these colleges with a bogus major. That's like I don't even know, but there's some made up majors. I can't think of one off the top of my head.
Mhm.
You're just like kind of scratching your head, like, is there a market for that? 1% of the people in the world will allow a job for that, and
Mm.
there's no market for it.
Yeah. I mean, there's definitely some, like you said, well, you said bogus majors.
I call them bogus because like
I
there's no
mean,
real market for
right,
them.
exactly. I also can't really think of one off the top of my head, but I know what you mean because sometimes, you'll ask somebody, "Oh, what are you going for?" and they say, something that you would consider bogus, and you're like, "Okay,
Yeah,
like, what
because there's no job
what are you gonna
market.
do with that
What
exactly?"
what are you going to do with that? That's great that you want to learn about that, maybe as a hobby or go back and
Like a liberal arts degree. What exactly is that, and what do you do with it?
it's so vague,
Mm.
right? I mean, I'm not quite sure either. But yeah, and then they looked at this article looked at some other factors too. Is like so the kids that graduate that use their degree that have debt tend to be higher income earners that aren't going to have an issue.
Yeah.
So like this $10,000 is really not going to help those people that have
Mhm.
the largest amount of debt that are using their degree, doctors, lawyers, things like that.
I was gonna say, like my sister who's completing vet school right now. She'll have a lot of debt, but she's a doctor, so
That's what I mean. And the first several years is going to take quite a bit to pay those debts down. And I know the payments are not going to be cheap, but they have that propensity to earn a lot more over the life of their career.
Mhm.
Whereas somebody who didn't finish college that maybe doesn't have as much debt, it would be more impactful to them. Is there a better solution? I don't know. I do think that interest rates are kind of ridiculous now. I heard some interest rates like 13, 14, 15% for student debt. That just seems like highway robbery.
yeah,
I mean, when you can go buy a house at a much lower rate, even now with the rates going up.
yeah. You always hear stories too. People have paid, 100% of what their original student loans were, but they still owe like 50K. Like
Yeah,
that's like you said. That seems like robbery.
it does. And not only that, but the tuition. So the rate of tuition increases. We did a blog post on this maybe 6 or 7 months ago. I want to say the average rate was like 12 to 15%, pretty similar to cost of healthcare.
Mm-hmm.
Where does that money go? A lot of it gets plowed back into the university for endowments and things like that.
Mhm.
But how about the professors? Most of them complain that they barely get an increase. the amount that they're getting paid is either cut or the class sizes are getting bigger. So they're hoarding all this cash. What are they doing with it? Like, what actually happens with these endowments?
Well, UB just spent an insane amount of money on a new football, like indoor facility, like a field house.
Really?
Yeah, and they cut like 20 other sports teams to fund it.
Oh,
So
great.
people were not happy about that. They got rid of baseball, like women's soccer.
Wait, baseball's gone?
Baseball's gone. Women's soccer's gone. A lot of other, I think women's swimming and diving gone, like stuff like that. So they cut a lot, like a lot of programs.
And they plowed that into the football field?
Yeah.
Ooh.
So I know what you mean.
Wow. What else is important? So LPL Research, they send out this Wednesday mailer for us, and we agree on a lot of things. I think not 100% on board with everything, but a few things I highlighted at the Jackson Hole Jolt, talking about the Federal Reserve and their hawkish stance increases the chance of a whipsaw. And we've seen that happen in the past few weeks. We already know what's probably going to happen with interest rates. I think a lot of that is baked in, but it doesn't seem that the market is settled. It's not content with that, with knowing that. How about next year's earnings? Earning estimates have to come down a little bit, even further than we anticipated. How about Friday's August jobs report? Well, again, in an environment where good news could be considered bad news, if the numbers come in too strong, then the market doesn't like that. If they come in too weak, then they do like it, which is kind of odd. When things are too good, it's a negative in this market. So again, I think we take those numbers with a grain of salt. Unemployment being so low, and I talk to business owners, they can't find help. Doesn't matter wages, they give them benefits, they do all kinds of creative things. They just can't find the people. They can't find the bodies. I don't know if people don't want to work anymore or what.
Yeah, I don't know what it is either.
All right. This one will kind of go back to what you mentioned at the very, very beginning segment, which talks about volatility. We mentioned the market started off okay. Maybe halfway through the first quarter started to head south really quick. And then we got excited maybe 45 days ago. And now we're back to scratching their head on, kind of wondering what's going to happen. So year to date, over 87% of the days, the trading days so far this year in 2022 have seen pretty big swings, right? And so in 2022, we are on course for the biggest down weeks since the Great Depression.
Wow.
That's not very exciting,
That's
right? If you're a client, if you're an investor, if you're a prospect, right? Then we also look at the up days in the stock market. It's also running at the lowest level since 2002. Going back 20 years. Again, not good news. Less than 45% of the trading days have yielded gains, right? The long-term average is about 52% of the trading days. We're only at 45, so less than half of the trading days so far this year have been positive. However, taking things with a grain of salt, LPL and their stance, their consensus is that we will have somewhat of a softer landing, a more mild recession is possible. Nobody knows. Are we in a recession? Nobody can figure it out. Textbook, yes. Textbook, no. Stock market says, well, things are not the best right now. There's still some uncertainty. And we're going to try to make more sense of that. Again, like I said at our event, we have a market update coming up in October. If you don't know about it, want to know more information, please send us a message. With that, I think that's all the time we have for today. Thanks again for listening to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with my co-host Sam Gueli. We will see you next week.
You've been listening to PennyWise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480-1580. Until next time, this is PennyWise Financial, signing off.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA, and SIPC.